All right. Welcome to the call, everybody. This is Josh Nelson. I'm the CEO at Infinite Wealth Strategist, or liveiws.com. I'm excited to have you guys on today. Obviously, somebody that cares about you invited you to this call. And we've got some phenomenal information that we're going to be covering today. Let me go ahead and share my screen here, and we're going to start with a quick 3-minute video.
Why are so many families in debt? So much debt that it impacts every area of your life? It's because your money isn't working for you. Debt affects where you live, what you drive, what school your kids go to, what kind of vacations you go on. Debt affects your time and freedom, if any, to do what you want to do. What if we told you the system you use for banking was designed this way, intentionally? It is designed for Wall Street and large banks to leverage your money to fill their pockets, while you take on the constant pressure of financial stress and rising personal debts. Question: when you send a deposit or payment to a bank or financial institution, do you ever see that money again? You don't. This is how it works behind the scenes. You deposit your hard-earned money into their banks. The banks then use your money to invest, earning them huge profits. You get a very small amount of interest for your money, but not enough that will eliminate your debts. So you continue living a life chasing debt where it feels to be no way out. What if we told you there is another way? A better way for your money to work for you? What if we told you there is a way for you to create an alternative bank system, the same way that major banks have set up, but allows you and your family to deposit and control your own money with the same earning profits that big banks achieve, but you control it? An alternative bank that can get triple compounded interest returns on the money you recapture, eliminating banks, finance companies, and high interest penalties from your life. Gain control of your money and create a tax-free retirement income for your retirement right from the start. What if I also told you that this alternative bank is created for you free of charge and includes a free financial advisor to teach you and your family how to use this alternative bank to pay off debt in 1/3 of the time it would take if you used a traditional banking system? Our financial team will create a customized map based on your debts and expenses and show you exactly how to become debt-free by teaching you to use your own banking system. By using the interest and dividends that your money creates, you accelerate wiping out your debts by taking control of how your deposited monies are used. Your bank creates your own banking economy that works for you, that you control. This all happens without changing your current income or spending habits. If you're tired of banks using your money to build their wealth, and you'd like to know more about how you can store your own money, build wealth, and create a real tax-free retirement income so you can live where you want, drive what you want, and give your family the life they deserve, click the link below to contact us today to speak to our advisors to learn more, free. Our mission is to help millions of families become debt-free by giving you back control of your finances. It can start now.
Awesome. All right. So I'm going to tell you guys a quick story. All right. First of all, let me tell you guys a little bit about my background. I was very successful in network marketing. I won't get into what I did when I was younger, but I had a 16-year journey in the network marketing industry. My wife and I were able to build a team of about 150,000 people, not only nationwide, but all over the world. We had teams in about 9 different international markets, and we were doing a lot of traveling. We were hardly ever home. And, it got very tiring. As exciting as it was to travel all around the world, and, I'm a beach person, so I've been able to see a lot of beautiful beaches. All we were doing was working. We literally didn't have money invested. We weren't doing anything with our money, quite frankly, because nobody ever taught us what to do with money. We were up to the point, folks, and I'm not saying this to impress you, but to impress upon you that it's not all about how much money that you make. And we were at a point where we were up to between about $60,000 and $80,000 a month for about 5 years straight, which is a lot of money. And we were mentally in a place where we didn't even think about money. We just went and spent money. We did whatever we wanted, whenever we wanted, with whoever we wanted, and it didn't matter. It wasn't even a thought. But the industry started changing and things with our business started changing. And we got to the point where we decided to step away from that industry. And what happens is when you don't have your money working for you and you stop working, you keep spending your money and your money goes away. And that's exactly what happened to us. We started depleting what we had saved up, but because we didn't have any kind of a system or any kind of investments, our money wasn't working for us. So that brings me to this story. I went on a journey a couple years ago to find something that I could do where I could go out and teach people and educate people about money. And I had to find a way to make my own money work for me, hence what I'm going to share with you guys today. So here's what I discovered during my journey of investigating why that happened to us. Why, when we stopped working, we drained all of our money. And here's what I discovered. So what I discovered is that we're all being used. We're all being used by the banks and all the large financial institutions. We have intentionally, folks, never been taught about money. They don't teach us about money in school. You know, there is no Wealth 101 or Wealth 102. And I figured that out at my, towards the end of my high school journey. My guidance counselor was trying to help me figure out a career path to go on. And I remember she gave me this pamphlet and I went through it. I had plumber, doctor, chiropractor, all these different, lawyer, attorney, different career paths that I could choose to go down. And I remember asking my guidance counselor, I don't want to do any of these. I want to be able to own my own business. I want to be able to travel the world. And, she said, well, you've got to pick a career path. So at that point, I ended up dropping out of high school, got a job, and lo and behold, I ended up in network marketing, met a lot of very successful people. But here's the thing. We're never taught about money. This system is rigged against us. I've got hundreds of clients all over the country, and every time I talk to people, they tell me the same story, right? People are living paycheck to paycheck. They don't have a lot of retirement. They don't really have a plan. They don't know how much retirement income they're going to retire with. And when I ask people, do you have a system that's going to produce you a tax-free retirement income? Almost 100% of the time, the answer is no. So it all comes back to that's the way the system was designed, folks. If you're a part of the rigged system, which means when you're born, you get a social security number, right? And as you get up to 16, 17, 18, you get a bank account, and then you get a job, and then you deposit your money in the traditional bank, and then you go pay your bills, and then we live paycheck to paycheck. That is the rigged system. Now, here's what Robert Kiyosaki says about money. If you haven't read this book by Robert Kiyosaki, Rich Dad, Poor Dad, or Cash Flow Quadrant, you need to go get it. First book that I ever read on money. And Robert Kiyosaki teaches you can be an employee, right, which means you're being leveraged. You can be self-employed, which really means you're still being leveraged, but just by yourself. Then you have a business owner, which means you leverage the efforts of other people to make money, which is a system, right? And then you have investor. Well, investor is where the money that you made from the E, S, or B quadrant goes into that I quadrant, where that money now starts generating interest and dividends. And you're in a situation now where you're not working for money, your money is working for you. Now, we've all heard that concept, and we've all seen presentations online where people show you how you can quote unquote get residual income. But most of that is not true passive income. Passive income is when your money is creating more money, not when you're in a system and people are buying and selling products and your residual income or passive income is dependent on a human being taking an action, right? That is still a form of passive income, but this is true passive income, folks. You have to have a system where your money can work for you. Now, the American dream is that we all want to create a debt-free, tax-free retirement. We all want to enjoy financial stability. And then we want to hit retirement age, right? We want to be able to retire without having to pay taxes or dealing with the IRS or any of the things that we dealt with when we were working a job. Now, very few people are on a trajectory to get them to that point, and we kind of live in this false reality where we just try not to think about it. And it's sad because then we hit 65, 75, and we wonder, man, where'd all the time go? And by then it's too late really to build anything substantial, right? Now, the vast majority are heading for a never-ending work life. And we see that all the time. It's no secret. Now, here's the thing, folks, you need to have a plan. And this is the simplest thing, to conceptualize, is that if you're going to get to a desired end result, you have to have a plan to get there. And most people don't have a plan because, again, going back to the rigged system, school, they don't teach us how to have a successful plan for our financial life. They teach us how to have a successful plan to be a part of the rigged system. Now, a plan is going to help you to achieve a desired outcome. Now, sadly, 97% of Americans have no real tangible plan. And here's my question to you is, what do you want your post-work life to look like? What do you want that to look like? You know, the day that you decide I'm not going to work anymore, I'm going to enjoy, you know, maybe being a grandparent or maybe doing the ministry that you know, is on your heart. Whatever those things are, what do you want your life to look like when you no longer want to work anymore? Now, once you can determine what that is, then that answer to that question should be the driving factor in your daily financial choices. Okay, so it all starts with that. Now, did you know statistically that the average person will live 2 decades more past retirement? I don't think most people think about those kind of things. Is that statistically, is that the day you decide to stop working, right? Most people live 2 decades beyond that. Well, if you don't have money working for you and you're a part of the rigged system where you're working for money, well, the day that you decide to stop working, what happens? Your money stops coming in. So if you want to retire and you know that you're going to, you know, 2 decades be in that retirement mode where you're not working and there's no incoming money coming, where are those funds going to come from? And that's what I'm going to get into right now. Okay. So wouldn't it be great if those 2 decades were the least financially taxing years of your life? You know, most people disregard even planning for their fourth quarter finances. I'm talking fourth quarter of life, not per year, the fourth quarter of life, right? I'm talking the last 25% of your life, which is the time that we want to go enjoy life. We don't want to be working for the rest of our life. I mean, look at this beautiful planet we have and all these amazing places that we can go enjoy. And most people end up, you know, working their entire life and they never get free enough to be able to go out and do those things. Now, what happens then? Well, you see people working at Costco, Sam's Club, Target, right? And I'm not saying this to joke or put anybody down. I think it's sad. I think it's quite pathetic, honestly, that we live in America and we've got grandparents that should be home with their grandkids waving at me and greeting me when I walk into, you know, Walmart or Sam's Club. You know, I think I should see a young kid there, you know, where that's their first job, not their last job in their retirement years. So here's some things that I found. Now, I'm really big on statistics. I'm not really an opinion guy. Everybody's got an opinion, right? But facts tell a story because facts are real. Now, here's the national average, and this is where reality is going to start sinking in, okay? This is going to get some of you guys to stick around to this entire Zoom and really pay attention because these are the facts. The national average of how much Americans have in savings by age group. Here it is. Under 35, about $6,306 is what people under the age of 35 have in some form of a nest egg, right? Now that could be 401k, that could be savings, or that could be investments. I'm talking nest egg means everything that they have, right? Their net worth in cash, you know, or money that's available for retirement. At 35 to 44, it's a little over 22,000. 45 to 54, close to 44,000. 55 to 64, now we're getting up close to retirement, you know, or at least thinking about retirement. Less than $70,000. How can someone work their entire life, 30, 40, 50, sometimes 60 years, right, that we work, and only have $70,000 to retire on? I can't even, that won't even, you know, that doesn't even pay my expenses for a year. 65 to 75, folks, it's even less. And then 75 plus, it's insufficient data, which means they probably have none, okay? So how bad is it really? Well, retirement planners suggest limiting your retirement withdrawals to 4% per year. So that means whatever you have in a nest egg, right? Whether it's savings or retirement or 401k or whatever that is, right? Most people, it's going to be a qualified government plan, like a 401k or IRA. Now, those are even worse to store and build retirement because now, if you're going to draw 4% per year to retire, you still have to pay taxes on that money. Because remember, qualified plans are tax deferred, meaning you're going to pay taxes later. Okay, and we'll get more into that in just a minute. So the professionals say that once you retire, the day you stop working and money stops coming in, whatever your nest egg is, that you should draw about 4% per year to live off of, okay? Now, if you wanted $50,000 a year in tax-free retirement money, you would have to have $1.25 million saved up. Okay, so $1.25 million that you have accumulated, where for the next 2 decades, you can draw 4% per year, right, to live off of. Now, again, if it's in a qualified plan, every time you withdraw that 4%, now you've got to pay the taxes on it, okay? Now, do you see anyone on that national average that I just went over on the previous slide that was anywhere close to 1.25 million in the national average? No, okay? Very far from it. So that's scary. Now, when I started thinking about this, I said, okay, well, what are some of the ways out there that people would think about? How can I get to 1.25 million, right? How can I get to that point so that I can have $50,000 a year to retire on? And again, I can't, there's no way I could live on $50,000 a year. You know, I can't even live on $100,000 a year, which means I would need more than 2.5 million, right? Probably closer to 5 for me to get where I want to go. So, you know, as far as the national average, I'm far from that. Now, some people would say to me, but Josh, I have Social Security though. Okay, well, let's look at that. Let's say that you get the maximum amount of Social Security, which is $1,229 a month. Okay, that's $14,207.748 per year. Okay, so if you were going to get that every year for retirement, you still have $35,252. And again, this is if you wanted $50,000 a year to come in, right? So at $50,000 a year, you have $14,748 in Social Security. That leaves a difference of $35,252 that you still have to create from somewhere. Okay. Now, at 4% withdrawal, you would still need $881,300 in a nest egg to take 4% per year. And again, it would have to be more than that if it was in a qualified plan, because you got to factor in the taxes that you have to pay on that. You know, you would need upwards of $1 million still, even if you have Social Security. So that's not going to do it. All right. No one saves near that much. Now, you may say, well, Josh, what about investing? What if I take the money I have now and I start investing it? Will that help me get to that goal by the time I want to retire? Well, let's look at the facts. Well, let's take a 55-year-old. Let's assume that when they hit 55, right, they've got about 10 more years to go until retirement. So let's say that they actually had the national average of 69,000 in their savings or their investment portfolio. All right. Well, let's assume, and let's be optimistic, that they took $1,000 a month and invested that, right? Whether it be a qualified plan or in the stock market or whatever. And that's, again, that's being optimistic. Okay. They would have to have an investment that would yield them a 32.6% return without fail in order to achieve that number. Okay. Now, I don't know of an investment on the planet that you can get that kind of a return. I do know ways that you can do it, but it takes a lot of money to be able to get that kind of a return. You're not going to get that putting $1,000 a month, and especially into the stock market in any way. Okay. So according to the research firm Dalbar Inc., the average long-term stock market mutual fund investor gains, and again, these are people that know what they're doing, over a decade, right? This is not per year return, it's over a decade, okay? So I'm talking about like retirement funds. 5.19% ROI. That's a long ways, folks, away from 32.6%. So we have ruled out that more than likely in the real world, investing is not going to get you to that number, okay? What about owning your own business? This is an easy one because I've owned many. Trust me and every other business owner, your business will own you, all right? You're not going to retire unless, again, you got to own your own business, but then you have to still get your money into the I quadrant somehow. So owning a business won't get there. Now, owning a business and what I'm going to share with you in a minute will help you get there faster, right? Because owning a business is better than being an employee. Now, what about winning the lottery? Some people go, well, what if I win the lottery? Well, I can tell you right now, you've got a better chance of being struck by lightning, okay, than winning the lottery. So we can't bank on that for retirement. Again, we want a plan, right? We want a guaranteed plan. And again, can some of these ways help you get to retirement? Yes, I am not saying that. I'm not saying these aren't good places to go learn and get knowledge on how to do it. What I'm saying is, in order to have a plan or a roadmap, you want to make sure that you can 100% get to your destination. And none of these things that I've covered so far are going to get you there 100%. Now, the other thing that I guess people say, well, I have a 401k. Okay, well, let's take a look at that. Well, almost all qualified plans invest your money where? In the stock market. Well, we just covered that, right? In the stock market. Now, the problem with qualified plans, and again, I already hinted to this, it's tax deferred, folks. Now, that sounds good because you get more money on your paycheck today, right? So the government makes all their programs sound really good. But think about this. When you give the government $1 today, if the stock market booms and that dollar turns into $10, which I can pretty much promise you it won't, okay, based on historical data, if that dollar turns into $10, now you have to pay taxes on that growth. You have to pay taxes on all $10 when you originally only put in $1. So now, as your portfolio grows, your taxes also grow. So to me personally, just my opinion, I'm not a financial advisor, 401ks make no logical sense to me whatsoever, okay? And what I'm gonna show you in a minute, it makes way more sense, and probably most of you are gonna wanna dump your money out of your 401k by the time I'm done. Now, governments have just one source. Think about this. The next time you put your money in your 401k or your IRA, think about this. The government has one source of money to feed their fiscal appetites, and it's you and me. The only way the governments get funding for these amazing retirement programs is if we give them our money, okay? So we are their source for that. Now, the stock market's like Vegas. It'll let you win now and then just to keep you in the game, right? But for those of you that have played in Vegas, you can win, and it keeps you there longer, but you eventually end up losing everything, right? Because the house always wins, and that is how gambling is pretty much set up, right? And to me, 401k is gambling your money. So whether you win or lose, you still got to pay the taxes. And folks, the bottom line is, look, stock market cannot be trusted with any money that you cannot afford to lose. Now, again, how can we get to that $881,000? Well, what you can do is you can schedule a free strategy session free with one of our licensed agents, and we will teach you how to have more money at your disposal during working years, as well as being able to have a tax-free retirement income, as well as being able to access all of the money that you're putting into this system that I'm about to show you in a minute. All right, now this concept that I'm about to teach you, it works 100% of the time. It's been around for almost 300 years, and not one human being on the planet in this vehicle that I'm about to share with you in a minute, in its history, has ever lost money. And that is what I discovered after looking at hundreds of different financial investment vehicles that are out there. Now, you can create a savings and investment system that will give you strong, dependable growth that will never go down. You will never lose any money on your retirement fund because the market decides to correct itself. Now, look at what just happened. We just went into a temporary, right, financial recession. Good thing is we're almost back up to where we were, stock market wise. But the fact is that when the market dips, all of our retirement dip. Well, not all of ours, people that have their money in those programs, right? And again, they're designed to do that. Whenever the stock market crashes, the rich people get richer. That's just the way that it works. Now, this system will also protect your money, folks, from taxes, judgments, which varies by states. Most states, it protects you from creditors and judgments, and you can access your money tax-free, and the government cannot get their greedy hands on your money anymore to pay all their overdue bills. Now, the IWS system, which is what I'm talking about today, is going to teach you how to recapture and recycle all of the money that you're currently losing in interest. Look, there's two things that we all hate. It's taxes and interest. Those two things suck about half of our money out, right? Interest takes up about 1/3 of our money, right? And then we have to pay taxes on all of our money. About 50% of our money ends up going to traditional banking institutions and the US government, okay? And it doesn't have to be that way because the wealthy people don't pay not even near that much in taxes, and a lot of them don't pay any taxes. And we can show you how to do that too, not any, but close to any, legally. Because again, there's financial vehicles out there that if you just do your research, they're available for everybody. Now, here are some of the features that your IWS bank must have, right? It's got to be safe. And when I was doing my investigation, I was looking for these specific features in every vehicle that I looked at. And this was the only vehicle that had all of these features. Number one, it must be safe, and it must be safer or safe as a CD or a bank savings account, because that's what we're all used to, right? We're used to a savings account where maybe you get like 0.0001 or 0.0002, right, percentage. Well, I'm going to show you how to get a lot more than that, but it's got to be as safe as that so that we all have the peace of mind. It must offer real growth potential, and it's got to be guaranteed. There can be no risk, right? If I'm going to put my money in a retirement vehicle for retirement, I want to have the peace of mind, which gives me my freedom to know that I'm going to be able to retire for sure, right? I must be able to access my money as well. Think about this. When you put money in a 401k, you can't access that money without some kind of a penalty, right? Meaning if you take a loan from your 401k, which means you're using your own money, right? Because maybe an emergency comes up and you need access to your own money. Well, in a 401k, you've got to pay that money back and you've got to pay interest on it. And in some cases, some companies charge you fees to do that, right? So they restrict your ability to get to that money, which most people end up not doing it, which is the whole point, right? Well, with this system, you can access your money with no restrictions or penalties at any time. Okay, and I'm gonna go over that in a minute. It must protect me from taxes and capital gains. It must not require a dramatic lifestyle change. Again, the program I'm gonna share with you right now, this is not a debt program where I'm gonna tell you you gotta spend a lot less money than you normally do, all right? It must accomplish my wealth building strategy for my family, even if I die before it's accomplished. That's powerful. That's legacy. And it must give me a way to build wealth with the same money that I'm using to purchase my debt with. Now, think about that, or pay debt with, I'm sorry. Think about that. I'm going to show you a way to use the money that you're paying your bills with right now to build wealth. Think about that. You're going to use the money that you're already paying bills with to build wealth. Now, I know that sounds weird, but pay close attention, because once you learn this system today, by not using this system, it's going to leave you exposed to unnecessary financial risk where you're literally, folks, you're throwing away hundreds of thousands of dollars in interest down the drain, and you're doing it right now. Right now, before I knew about this system, I didn't even realize it, but I was throwing away hundreds of thousands of dollars down the drain. Now, let's talk about this rigged system. Number one, the banks, this is how the banks make money. They use our money to create loans. When you deposit your money into the bank, they turn around through what's called fractional reserve banking, okay? And you can go Google that. It's crazy. Every time you give the bank $100, they only have to take $10, put it in the vault. They can take your other $90 and they can go create another loan. So they can create money out of thin air from your money and then go loan your money to somebody else. And then they charge interest on those loans and they keep all the profit. That's how the traditional banking system works, folks. It's designed for failure because every time we give the bank money, they make more money. They create loans and charge interest, and they keep all of that money, which they're earning on our money, and we get nothing. So that's how the rigged system works. It's designed for the banks to win. It's called fractional reserve banking. All right. Now, the banks make between 400 to 1,300% annually on every dollar that you give them. Now, look, I'm going to show you right now how you can do this yourself. Okay, now you can't make 400 to 1,300% like the banks do because they're doing it illegally by creating money, right? They can print money. The feds can. We can't do that, but we can get our money in a system where we're getting interest on our money. We're able to borrow our own money in the form of a policy loan. We're able to still pay our bills, but we're able to earn interest on that money the entire time. So here's how the rigged system works. And you're being robbed, right? We deposit our money in the bank, and let's assume you have a CD or a savings account, and you can see over to the left, the bank is giving you 1%. Well, now the bank takes your money, they create more money, and now they go loan that money out. Well, you might even be the person getting that loan, right? You go back to the same bank and you go buy a home, they're essentially loaning you your own money, and now they're charging you interest on your money. And now they're making 5% on your mortgage, 8% on your car, right? And again, those numbers vary based on your credit and, going through your whole FBI investigation that you have to buy anything these days, right? And then they assign a value based on your credit and your income and all those other things. Well, look at what happens. The bank is making, 25% on your money plus fractional reserve banking, and they're giving you 1%, right? And they expect us to jump for joy. So the banks make the difference, okay? So how do the banks make money? They make money, number one, because you're their investment. The more money you give them, the more money they make. And that's why banks offer free little Starbucks cards, for, coming and opening up a bank account, right? They want your money. also through fractional reserve banking, charging you interest and everybody else interest on your money. So the bank is making money off of you. Now, where do the banks invest their money, right? I just showed you the banks make money through fractional reserve banking. They make money by creating loans and charging interest. And again, why am I talking about this? Because we have to look at what the banks do, and we need to go do those same things with our own money. Well, where do the banks invest their money? Where are they in the I quadrant, like Robert Kiyosaki talks about? Well, they invest their money in these secret accounts that I'm about to tell you about so that you can go and do it yourself. Bank of America puts $18.5 billion a year, folks, in the account that I'm about to tell you about. So if people ever ask me, well, are these safe? Well, B of A puts $18.5 billion of your dollars and my dollars in there every year. So obviously there's got to be a reason, right? Citibank, almost $4.5 billion. JP Chase Morgan, about $9.8 billion. Look, that's only 3 banks out of over 4,000 banks that we've discovered that are using these accounts, okay? Now, these banks also would put more of their money in there, but the government only allows them to put up to 25% of their tier 1 capital into these accounts. Well, what does that tell you? There's something going on there that we need to investigate a little deeper, because if the government's restricting how much money they can put in there and the banks are all maxing that number out, there's got to be a reason why they're doing it, okay? Now, so what are these secrets accounts and how can I become the bank, right? It's like, okay, Josh, I get all of this. You've totally exposed the reason why I'm in the financial position I'm in. So again, folks, it's no secret now for you. You can't blame yourself or anything that you've done up till now for the reason why you're at where you're at. You're a product of a broken, rigged system. Now, the definition of insanity is doing the same thing over and over and expecting a different result, right? So after this call, if you keep banking the same way you are today, you're going to be in the same position. You can't logically think that if nothing changes, that on the other side of the equal sign, that nothing changes, right? If you change the equation, you change the result on the other side. So how can I become the bank? Well, you can become the bank by using a highly sophisticated, specially engineered whole life insurance policy with a mutual fraternal company that pays dividends, okay? Look, folks, this is not a life insurance policy like you're used to. This is a supercharged nitrous oxide boosted policy that is designed with one reason and one reason only: to skyrocket the growth on your income. This is not designed for a death benefit, although you get a much larger death benefit by default by owning one of these banking policies, okay? I'm going to show you a way to pass on general wealth like you would have never imagined that you could do for your family. Because if you do what I'm about to show you to do, you're going to get a massive death benefit, much larger than you would ever get on any traditional policy that you would ever buy. And you're going to get massive benefits along the way. And I'll tell you this, what I'm going to show you right now is a way for you to have life insurance for free for the rest of your life, and to be able to pass on all, if not more, of every dollar of income that you've made in your entire life that ran through this system, okay? Now, this is not your run-of-the-mill life insurance product. These are rare accounts that behave more like a savings or investment account, okay? The government restricts the advertising that these companies can do, which is why they love guys like me and all the agents, whoever invited you onto this presentation. That's why the insurance companies love us, because we can go out and educate the masses, especially in a time like now, on how to use these amazing tools as a financial vehicle and not a death vehicle, right? This is a true living benefit policy, not a death benefit policy. Now, life insurance is safe, and it's been in existence since before the United States was a country, okay? Now, I'm going to quote a couple successful people, because my mentor always taught me when I first went into this, entrepreneur, finance industry. One of my mentors said, look, Josh, if you want to become successful in life, here's the secret. And this applies with anything that you want to do. If you want to be a professional musician or a professional athlete or whatever it is, right? Do what successful people do. If you want to learn to play golf, go to Tiger Woods. If you want to learn to play basketball, you go to like a Michael Jordan, right? You're going to go to the people that are the best. Why? Because they can save you time. They can prepare you for the mistakes that you're going to go through because they've already been through that journey. Look, I love to quote Warren Buffett because he said, look, if poor people would just do what rich people do, they wouldn't be poor anymore. He didn't say you need some special education. He just said that if you watch wealthy people and copy what they do, you'll get the same result that they get. Why? Because these financial vehicles don't discriminate, folks. When you put your money in the same place that Warren Buffett puts his money, money doesn't discriminate, okay? It's going to perform the same way, whether it's your dollar or his dollar. So he's saying, if you do what I do, you'll get what I got, okay? Now, let me prove to you that what he says is true. If you do what wealthy people do. Well, Walt Disney uses whole life insurance with a mutual fraternal company that pays dividends as a banking system. Back in 1955, you can Google all of this stuff, folks. Again, I don't like to give my opinions. Everything that I'm giving you are facts that I discovered throughout this story that I'm telling you, my journey of discovery. I discovered that back in 1955, Walt Disney secured a large bank. He couldn't get a large enough bank loan, right, from the traditional bank. Thank God he had whole life policy set up this way. He was able to borrow against that cash value, and that cash value was still growing while he borrowed the money out, right? Which is a beautiful thing. And he was able to go and start Disneyland. Ray Kroc back in 1961, he used his whole life banking system as a mechanism to pay salaries and to fund the Ronald McDonald campaign. James Cash Penney, again, look, folks, this is a long time ago. This is almost, this is over 50 years ago. Back in 1929, when the stock market crashed, James Cash Penney couldn't get loans from the bank to save his company. He borrowed out of his whole life policies, bailed out J.C. Penney, and grew it into a $3 billion company. So what I'm showing you with these whole life policies and how we're engineering them as a banking system is not a new concept. It's not something that I created. It's what I've discovered that wealthy people have been using for hundreds of years, okay? Now, we all know Albert Einstein, one of the smartest people to ever walk this planet. Albert Einstein said this about money. And again, it goes back to the wealth principle, right? It's just like what Robert Kiyosaki's teaching about the I quadrant. You got to have money working for you. He said, compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. Well, if you don't understand how compounding interest is created, then right now you're paying it. So if you have loans and you have credit cards and you have a mortgage and you're financing things through the traditional banking system, according to Albert Einstein, you don't quite understand compounding interest. You understand it from the level that you're paying it, but I'm going to teach you right now how to understand it from a different perspective, folks, where you can now begin earning that, okay? Now, here's how compounding interest works. Again, he who understands it earns it, he who doesn't pays it. Well, this is an example of someone that doesn't understand it. And again, these are national averages, okay? Look at the chart on the left. Everything in yellow is interest. Everything in red is principal, and then everything in green is your savings. This is the typical American. The typical American is spending 34.5 cents of every dollar that you earn on interest. And if you don't believe me, go look at your credit cards, your mortgage, your car payments, everything that you're paying with interest. Go add up, look on each bill, just the interest that you're paying, and then add that up based on the amount you're paying and figure out the ratio of that. It's scary when you start figuring this stuff out, folks. And if you look at the chart on the right, when you're paying interest, you're in the negative, right? So if you look over a period of about 30 years, you're already about, according to the national averages, an average family is $140,000 upside down in interest payments. Look, what if you could recapture that $140,000? What if you had a way that $140,000 that you're currently giving away to the banks and the government could somehow funnel back into your own banking system. That's a lot of money, folks, right? Now, so again, 34.5 cents of every dollar that you make is going into the form of interest. So you are there. Now, how do we get out of the rigged system? Well, I'm gonna teach you two things that you can do, and I'm gonna show you how to do both those things at one time, okay? And again, going back to Albert Einstein and Warren Buffett, let's look at just those two guys on what they said to be successful. Number one, do what the rich do, okay? So you need to have your own banking system, like Walt Disney, Ray Kroc, James Cash Perry, and just about every other wealthy person that I know has a system like this. So number one, you got to have your own bank. And then number two, you got to position yourself where when you put your money into that new bank, that it's going to create compounding interest in a tax-free manner. All right. Now, here's how you do both at once. You allow us to create a banking system for you for free. We don't charge you anything, folks. You're never going to pay anything. You're going to just make your first deposit into your bank. We're going to set everything up for you for free, and we're never going to charge you any money. So you saw an example before how you had a savings account, the bank was paying you 1%, they were charging you 25%, and they were making the difference. Well, now you're going to be able to put your money into your own bank. You're going to earn a minimum of 4% interest on that money guaranteed, okay? But you're going to actually get more than that because you can get a dividend on top of that. So you can get between 5 and 9% on your money, 4% being guaranteed no matter what. And now you have a banking system. You have your own money going in a vehicle where you can borrow against that money. Okay, and I'm going to talk about that more in a minute. And now you can charge yourself interest. You can borrow your own money where you put it in a system. It's earning interest. Okay, and remember, this is a life insurance policy, so you have a death benefit. The way that this works is you're using the cash that you deposit in the bank as collateral to borrow from your death benefit today. So for example, if I deposit, right, let's say I go to my job and I make $5,000, right? Here's $5,000. And I deposit this into my new banking system. Well, over here, I have a death benefit that's a lot larger than the cash I'm putting in, right? I might have $1 million face amount policy, right? Well, what I'm doing is I'm telling the insurance company, look, I'm giving you 1,000, but I want this money to stay in my banking system because I want you to continue trading it and investing it and earning me a return on my money. But when I die, you're going to have to pay this $1 million out. So why don't you just keep this money, right, as collateral? Let me borrow from my death benefit today. Okay, again, this is my collateral. And now I can go pay my bills, do my investments. I'm spending my income, right? But it's still in my banking system earning interest. So folks, what we're doing here is we're putting you in a position where you can store your money in a warehouse. The insurance company invests that money, right? Which means you're getting a return on your money. You can borrow from your death benefit today, meaning they're going to pay you early the money that they would pay you when you die by just using your cash as collateral. Same thing we do with a house. If you go and get a loan against your house, you put your house up as collateral, but you don't sell the house, right? And the house is going to continue building equity, but you're not giving away the house. You're just giving it to the bank as collateral for them to give you a loan, and then you pay the loan back. But in that situation, the bank makes money. In this situation, you're doing it all yourself now, and now you can borrow from yourself, and then guess what? Pay yourself back, charge yourself interest, and now you're actually paying yourself back, and you're making money on yourself. Think about it. Why would you not want to pay yourself interest now? You're making money. You're just depositing the interest into your own banking system. And now that interest is going into a system that's earning interest. Okay. So here, same situation, but we just flipped the script. So the images are the same, but now you became the borrower. You're the borrower and you're the bank. Okay. And remember, it's life insurance. So every year we're going to keep depositing more money into the system, which is going to every year produce more tax-free retirement growth because we're earning compounding interest on a compounding balance. Okay. So you flipped the script and you just became the bank. Now, again, wealthy people don't spend their income, right? Again, if I have $5,000, right? If I go to my job and I trade, 100 hours, to make X amount of money, right? Let's say that I worked all month long and it was hundreds of hours, right? Maybe I'm working 80 hours a week. That's like 400 hours a month or whatever that comes down to. I want you guys to look at money different. This is something my mentor taught me that changed the way that I think about money, okay? If I go to work and I trade, let's just say 400 hours for $5,000, and let's say that my monthly expenses between all my bills, my mortgage, my car payment, my utility bills and food and all that stuff is $5,000. That means, and again, this is the rig system. If I deposit this money, not into my new banking system, but back into the rig system, and now I go swipe my debit card and I pay my car payment, I pay my mortgage, I pay my credit cards, I buy my gas, my groceries, my food, my fun, my fashion. Well, at the end of the month, I just gave away all $5,000 to all the other financial institutions, which means I just gave away all my income, which was my time and my money. I can't ever get that time back, folks. Look, you have to start valuing your time more than you value money. Because now when you go out and you spend your money, and this is what wealthy people get. This is the only difference between wealthy people and everybody else. They understand that they traded time for that money. So if you go pay the electric bill and you figure out the amount that that bill cost you and then how many hours it took you to earn that money, start looking at that bill not as my electric bill was $200, but that electric bill was, 18 hours of work. That's 18 hours that your kids can never get back from you. If you start looking at money that way, you're going to realize why wealthy people all build a system. Because wealthy people want to take that 400 hours of work, they want to deposit it in a system where that money is going to continue to produce interest so that that valuable time that they can never get back gets deposited with their income into their own banking system. That is a beautiful system, and that is how wealthy people get wealthy. Now, how does your IWS system earn interest compared to the other way? Remember, the other way you were giving away 34.5%. Well, now that you have your own bank set up, you're now recapturing all that interest. So look, the graph changes. All that yellow and all that green and all the principal all stays in your bank now, all of it. So you're not giving away the principal, you're not giving away the interest. Now you're keeping the principal and the interest within your own economic system where that money will never leave. And now you can borrow against it from your future death benefit. You can continue paying all your bills the same way that you have. Lord have mercy. Can you imagine if we all knew about this when we were 18 years old? I got sick to my stomach when I first saw this because look, I've earned millions and millions and millions and millions of dollars throughout my entire lifetime. Well, for about every $1 million, right, about let's say you took 5% per year, that's about $50,000 annually that you would be earning on that money. Now remember, in the rig system, if you have $1.25 million and you retire, that money is not growing. You're taking out 4% per year, which means it's diminishing. And when you die, you have nothing left. With your new banking system, you're spending the money while you're alive. You're not losing any of the money, and you're still passing on a benefit to the next generation. But all of your money is staying in a system, and the income that your new banking system is producing is actually continuing to grow each year. Meaning whatever the bank earned you this year, you're going to earn more next year because every year we're putting more of our income into the system to continue building that tax-free retirement income. So look, you can tell I'm getting fired up right now. Look at the graph on the right. We just flipped the script. Now you're earning that interest instead of losing the interest. And you're keeping all of your money in your own confined system. Now, how can you access that money? I talked about policy loans, and I'm going to fly through the rest of this, folks. Look, when you borrow money from your own bank, meaning you take money out, just like you do at the regular bank, right? You go into Chase and you withdraw money. Well, you're going to go into your new bank and you're just going to withdraw money. They just call it a policy loan. So every time you make a withdrawal, the difference here between a traditional loan is that there are no credit checks. Look, you determine if you get the loan because you're the bank. There's no proof of income. There's no application. There's no references. Look, there's no questions asked. You literally walk into the bathroom in the mirror and ask yourself, can I get this loan? I want to go buy a new car. Can I borrow the money to go buy this car? And I guarantee you the answer is always going to be yes. Now, these are non-direct recognition loans. What that means, and again, I'm educating you on our language, direct recognition means when you take a loan from your bank, and most insurance companies are this way. let's say I have 100,000 in my bank and I'm going to borrow 50,000 to go buy a car. Well, if it's a direct recognition loan, they're going to recognize that loan off my cash value, and now I'm earning interest on 50,000 less. You want to have a non-direct recognition loan, which is what we offer. Okay, the companies that we write business with are non-direct recognition, meaning when you take a loan, so let's say again, you have 100,000 in your bank and you're going to pay employee salaries, or you're going to take that money to invest, or you're going to go buy a car or take a vacation, right? Whatever it is, when you borrow the money from your bank, they don't recognize that loan off your cash value. So if I have 100,000 and I borrow 50 to go buy a car, I'm still earning the full interest on the 100. Because remember, I use that money as collateral, not to take money from there, but to take it from my death benefit. Direct recognition companies, you're actually borrowing the cash out of your own system. You don't want to do that because then it breaks the whole model. All right. So again, there's no penalties for borrowing. You can borrow without reducing the principal, where you're earning tax-free growth. Policy loans are simple interest, 5% per year. That's $50 per $1,000. That is ridiculously cheap. And again, you're paying the interest back to yourself, which really negates the interest on the loan. Look, that's 0.4% per money. Can you imagine building a bank, right? And let's say 5-10 years down the road, this bank becomes large. You can tap into that cash at any time you want with no credit checks or anything at 0.4% per month in interest. For the real estate people on the phone, that should get you jacked up right now, because now you can keep all your own money in your own system and you don't have to go pay ridiculous interest fees to banks. Now you can make a payment or don't make a payment. Look, my clients that finance their own cars during this COVID crisis, you know, some of them lost their job and they could not make a car payment to a traditional finance company. But because they had their own banking system, they just decided not to make a payment these last few months. You know, what, are you going to get mad at yourself for not making a payment? No, just pay yourself back when the money kicks back in and you can afford to put it back into the system. No big deal, because again, remember, paying back a loan is just you depositing the money that you borrowed from yourself back into your own system. That's called being a responsible banker. Now, missing a payment will no longer affect your credit score or block your ability to get money from a lender, cause a repossession, or allow you to lose your dignity. Now, let me just teach you a couple things and give you a couple examples, and we're going to wrap this up. All right. The secret to success is to own nothing and control everything. Okay. So again, another wealthy person is giving us advice. He said, you want to own nothing, but you want to control everything. And I'm going to talk right now about control. When you have your money in the rig system, you have no control. When you sign the deposit slip or the back of your check, they're not doing that because they want your autograph. You're signing over the rights of your money to the bank so that they can go create more money, loan it out, and you authorize them to be able to do that. So you're literally relinquishing control when you give your money to a traditional bank. Okay, same thing to business owners that are on the line. You know, when you take out corporate credit, you know, you're giving all the power to that corporation now, that traditional finance company, and now essentially your business is owned by the bank, right? So you want to have full control. So that means you need to get out of debt. Our goal as the IWS system, the system was designed to get you out of debt, because the minute that you don't owe anybody else any money and you have your own banking system, the golden handcuffs become free. And now you can control your own destiny, folks. Look, all financial pressure comes from the traditional system, because they teach us to use the bank's money to do everything in life. And then we are basically we are a slave to this financial system, okay? Now, our licensed agents will build you a custom, what we call a cash flow analysis, free of charge. What is a cash flow analysis? Well, I'm going to give you an example of John Smith. Okay, John Smith is a client of ours. This is a legitimate client. I've changed his name for obvious reasons. John Smith came to us and said, listen, I have $150,000 of a nest egg, right? So he was doing a little better than the national average, but it was in a retirement program, you know, that was not doing so well, okay? He said, listen, I can take that 150 and I can deposit it into my banking system to get it up and running. Now, again, I have clients that start with $200 a month. All right, so don't think you need a big amount of money to do this, okay? But I'm just gonna give an example. He deposited 150,000, and then he said, from my income that I'm making, I usually like to start people at around a third of their income, and then you're gonna end up getting more banks, and we'll teach you that strategy as we go. So he does 30,000 a year. So again, he's gonna deposit $180,000 his first year, and then every year after that, he's gonna take his income that's already coming in anyways, that he's already putting in the regular bank anyways, but he's gonna run it through this system, okay? So before I go, John didn't do anything different. He had money already in savings. All he did was he took it from his right pocket, moved it to his left pocket, and he took a percentage of his income. He started running it through his new bank. Now watch what happens. Let's go to year 20. At year 20, John Smith would have deposited $695,380, okay? So that's the 180 year one, and then 30,000 that he was putting in. And again, the whole time he's been using this money. So he's still paying bills, going on vacations, and doing all the things that he normally does. But because he put his money in his own banking system, he now has $1,030,000 in that system. So he only contributed $695,000, but because that money, his income, was earning interest and dividends, right? He took his money from the B or the E or S quadrant, moved it into the I quadrant, right? So now the money began working for him. Look, he made $335,000 profit on this banking system, and he has a $2.1 million death benefit. All right, now watch this. Here's where it gets exciting. Let's look at retirement income. So again, for 20 years, right, he put his money in here, and I just showed you how that works. Now let's go to year 30. So John is now age 75, and you already see that he's just started depositing money from his income. At age 75, if you take the cash value, right, the annual cash value, which means how much, when he makes a deposit, how much the insurance company credits him that year. That means his deposit plus all the interest and dividends that his bank made for the whole previous year. So this year, he would deposit $24,538 of his own money, but the bank will increase by $77,962. So that means every year, John is getting $53,424 in tax-free income. Now, I kind of misspoke, and I said every year he's getting that. The next year, it'll be more than this. Because remember, he's going to put another $30,000 in this year. So when he gets paid next year, there's $30,000 more in there that was earning interest on top of the original money that he put in there. So every year, that 53 might be 58 the next year, and then 62 or 63 the next year. So that's the beauty, folks, of these policies, is every year they get better. With age, they get better, right? Just like wine. So that's $666,000 in profit. Here, I got to go back to that because that's powerful. If you look at the ROI, just over 30 years on this policy, okay, so John's age 75 now, he's averaging over $50,000 a year, which, remember, before, you had to save up $1.25 million, and I showed you every way that won't happen. Plus, you have the taxes on all that. Here, you didn't do anything different. You just created a stupid life insurance policy. You started running money through it. Nothing changed. You still paid your bills the same way you always did. You didn't change anything different, and you achieved that over 50,000, and it's tax-free, folks, and it's going to grow year over year for as long as you're alive. Now, just over that 30-year period of time, if you add up all the interest and dividends on all 30 years, John made an additional $666,000. So he deposited, go down and look at year 27. He deposited $867,000, but he's got $1.5 million in his bank. So that means his bank earned $666 tax-free dollars, okay? Now, let's go to year 38, okay? His ROI over another 10 years, 11 years, right? It doubled. Now his profit's $1.2 million. That's another $600,000 that he was able to enjoy in his retirement years completely tax-free. All right, so here's an example of how the money flows. Number one, you have a job, right? You have a job or a business. You deposit your money into your bank. The insurance company invests that money for us, right? And they're the best investors on the planet. Look, these companies have survived world wars, recessions. They've been around for over 300 years. And again, no one's ever lost money on a life insurance policy, not a whole life insurance policy. Okay, and trust me, you won't be the first. Now, because the insurance company invests the money, it's safe to say that that creates an ROI. Well, remember, in the rigged system, when the bank gets an ROI, you don't. But in your own banking system, when the insurance company gets an ROI, so do you. So with your 4% interest every year plus your dividend, you added, and again, this is at year 20. Okay, we see what happens at year 30 and year 38. This is just at year 20. John had deposited $695,000. Okay, if you add the interest, he profited $335,000. If you add those two together, he has $1,030,000 in his bank that he has access to paying his bills and doing all things that he's doing. Now, again, you have the death benefit, right? So this is the flow of how your bank works. So he also has this death benefit. All he's doing, folks, in order to access that $1,030,000 right there, he's using that as collateral to access that death benefit, which turns it into a living benefit. And through the policy loan, you're able to access that money completely tax-free, okay? Now, let's talk about legacy. Let's talk about what happens, because I have people ask me, Josh, what if I died at year 20? What would happen then? Well, let's say you died at year 20. They're going to take the cash value, right? Or I'm sorry, they're going to take your death benefit. So let's say that you use the entire $1,030,000, right? So let's say in retirement years, you weren't concerned with paying yourself back, and you just sucked all the money out of the policy to go and do your bucket list, right? Which is what I encourage most people to do. The beauty of that is you have a $2.1 million death benefit. So they're just going to take that $2.1 million death benefit. They're going to subtract what you've borrowed, right? Which is $1,030,000. What's left over is legacy that passes on to the next generation. So let me give you the results of John Smith's policy over a 20-year period of time. John injected $695,000. John spent $1,030,000. Okay, so he spent more than he was able to if that money was in the regular banking system. He made $335,000 all tax-free, and he passed on $1,086,000. Folks, look, if John Smith died at the 20th year, he only put in $695,000 of his income. He passed on over $1 million. Look, this is why wealthy people insure their income. If John Smith would have put that $695,000 in Chase Bank, he would have spent $695,000 and he would have passed on $0 to the next generation. Here, he spent $335,000 tax-free dollars more than what he made at his job, and he passed on, almost double what he actually contributed to the banking system. And again, if he would have lived to age 30 or 30 or 40, the numbers would be even greater. Now, here's just one more example. This is a client that put in $40,000 up front and $3,600 a month. Just go to year 20. You guys know how to read this now. Client deposited $104,700. They have $164,000 in their system. That means they've made $60,000. So again, on a very small policy, this is a couple $100 a month, right? Like $300 a month, I believe. They already made $60,000. Let's go to age 75. The client made $463,000 at age 75. 75. So again, this is a powerful system, folks, and it's so powerful that you can actually do this on your children as well. This is a policy, we call it the legacy builder. This is on a 3-month-old grandchild. Let's just go to retirement years. Go to age 70, right? Go down to age 70. The client deposited $212,000. They have $1.3 million inside their bank. That's $1.1 million ROI. And again, that's all tax-free, folks. Now, last but not least, we offer what we call a mapping service. And right now, for a limited time, we're offering this service completely free. Okay, it's normally about a $2,000 value because there's a lot of time and a lot of money that has gone into the system that we've developed to be able to provide this all-inclusive, exclusive tool that nobody else has. Okay, this is something that is exclusive to the IWS family. Now, we're focused on overall time and money savings. We want to show you how to pay off your debt in a third of the time with a third of the money, okay? And if that sounds attractive to you, then get back with the agent that invited you here, and we'll show you how to do this for free. The map's going to identify which debts are costing you the most money. We're going to show you how to prioritize them accordingly and initiate the most appropriate strategy to recapture all of that interest. You're going to know the exact day that you're going to be debt-free. You'll know exactly how much money you saved and recaptured or will. You're going to know that ahead of time. Before you even start the plan, you're going to know how much money you're going to save by following the plan. The map's going to show you exactly when you're going to be debt-free. Now, here's an example of our map dashboard. Again, you're going to receive this when you become a client. This map shows that this, and again, this is a real client. This client was $422,000 in debt. We were able to save them 11.42 years off of payments, okay? This client is going to save over 11 years of payments, okay? They're going to save $110,000 in interest. So here's my question. This client had two options. Either they continue in the RIG system, and you can see down at the bottom, they would have paid $236,000 in third-party interest, okay? So that is, if you look at the red bar right there. Now, the green bar is with our system. So again, he would have paid $236,000, but with the IWS mapping team, we got him down to $126,000 in interest. Okay, that's $110,000 in savings. And again, he would have paid, 252 months worth of payments. Now he's going to pay it only in 115 months. So that's extremely powerful. Now, again, this is the actual map. This is where we show you when and what payment to make. This will be custom designed for you. We also show you how the policy loan interest works and the fact that you're going to be out of debt. And we also show you the day that your bank will be refilled and recaptured all of that money that you used to pay that debt. So we go very in depth with this. Now, here's an example of one of our clients. This is a real estate client. This is a real client that we have, and he gave us permission to use his example. When we started with this client, he owned 6 homes and he owed $983,000 in principal. Remember the compounding interest graph. So 983 would have been in red. 242,000 would have been in yellow, which remember, all of that would have been going to the traditional banking system. He had 185 months left that he owed in interest. Okay, so he would have paid payments for 185 more months, which is 15 years and 5 months. Now, at the end of that, he would have been out of pocket $1.225 million. Okay, so with the RIG system, 15 years from now, he would have owned all 6 homes, but he would have had to spend $1.25 million to get it, and he would have no money left in the bank. Now, with the IWS system, we showed him how to recapture over $150,000 in interest, okay? So this client's gonna inject $300,000 into their bank over 5 years, okay? So he's putting in about $50,000 per year, this particular client, okay? So now, in 63 months, we have him completely debt-free, and he was able to do it with $150,000 less dollars, okay? Now, here's the final results. If this client, which by name, his name is George, if George continued to pay himself back, so remember, he committed to pay those loans for 15 years. We paid them all off in 5, but he committed to 15. So he's going to continue making those mortgage payments every month, but now he's not paying them to the bank because we already paid off the bank. He's paying them to himself, which means all he's doing is taking his income and he's just depositing it in his own bank instead of the traditional bank. Well, now at the end of 15 years and 5 months, George has $1.25 million inside his bank and he owns all 6 properties. So here's my question to you. Would you rather end up at the end of 15 years through the RIG system where you end up with nothing? You own the asset, but you have no money because the bank took it all and all the interest. Or would you rather end up with the houses, the interest, and $1.25 million in your bank? Oh, and by the way, the money that you spent to pay off those houses was earning interest the entire time over those 15 years in your banking system. So I didn't even account for the ROI on top of the $1.25 million that you have back in your bank. So folks, look, This is common sense. This system just makes sense. Now, who is this for? It's for investors. Look, you want to double dip on your money? You can put your money, and for people that own businesses that pay employees, right? If you're paying salary right now, what if you were to take that money or to the investor or to the people that are paying their bills, you put your money into your new banking system, and then you just withdraw the policy loan, pay your salaries, make your investment, put it in Bitcoin, buy gold and silver, buy groceries at the store, take a vacation, buy a car, whatever you do. Every time you spend money now, that money is earning interest inside of your bank. Powerful. So it's for investors. It's for parents who want to put your kids through college. Imagine building a college fund where once your kids take the money for college, the money is still creating your children a tax-free retirement income. You can't do anything better for your kids than that. You can use it to pay for vacations and recapture all that money, pay for vehicles. Imagine every 5 years you buy a car, you get the money back. And then you use the same money to buy the next car. But that money earned interest that whole 5 years. Now you have more money in your bank. Every 5 years you can go buy a better car, right? With your own money. You can purchase homes and leave a legacy for your kids. Now, last but not least, what would cause you to make a decision to do this? Why would you undertake the discipline of changing the equation? Well, it's to get a different result. Remember, the definition of insanity is doing the same thing over and over and expecting things to change. Folks, look, doing network marketing, doing another business, selling, look, all those things are great ways to generate additional income, but it's not a real plan that's going to get you to the desired result. What I'm showing you today is how to change the equation with a guaranteed result on the other end of the equation. Look, how would you feel knowing, let's say 30 days from now, you work with us, allow us to provide our service for free, and at the end of all of this, you have a system with a map and a date and a plan on how to get to your goal, where you know the day that the golden handcuffs are finally free and you're finally out of the rigged system, and now you have your own system and you no longer have to participate with that anymore. You don't have to deal with banks, creditors, financial applications, credit applicant, none of that stuff. You take it from outside the economy and you build your own. Well, why would you do this? You have to have a why. Your why should be to buy your life back. Because look, when I worked for someone else, I was owned by someone else. When you have a job, you work for them, right? You're building their dream. You're building their retirement. You're putting their kids through college. You're buying their kids' vehicles. Look, it's time that you take your finances back into your own hands, folks, and that you control the outcome of your destiny. You need to find an answer deep inside of you, and you need to get yourself out of the rigged system. So schedule a strategy session today. Get back with the agent that invited you here, or you can go on their website. Down at the bottom of almost every page, you can click the button that says book a free strategy session, and allow us to sit down with you over a Zoom and customize a program that is going to work for you and your family. So again, I know I went a little bit long today, folks, but listen, I don't want to shortcut this and I don't want to devalue it. I want to make sure that I spend the right amount of time so that I deliver enough information for you guys to realize that being a fault of the default system, now that you know about this, is a choice. And that's the best thing about human beings. Look, there's something in the universe called the law of consequence. Anytime you take an action, there's a consequence on the other side. Going back to the mathematical equation, right? Going back to the Bible, you reap what you sow. The law of consequence says that when you take an action, on the other side, there's going to be a different result. And the beautiful thing about being human beings is that we have choices. Now you have a choice. What do you have to lose by allowing us for free to take 30 minutes of your time and put together a program that you can decide whether or not it's going to give you a better quality of life. So again, thank you guys so much for getting on today. I'm so excited every time I get to share this information with my friends and family across this country and around the world. And I can't say enough that I'll be excited to meeting every single one of you and helping every one of you get to your financial goals. So again, get back to the agent that invited you here, or click the link down at the bottom that says book a free strategy session on that agent's website. And one of our team members will get back to you and we'll show you guys how to get on the path of financial freedom. So thank you guys so much. God bless and have a wonderful, wonderful weekend. Thank you guys.